Today, we're going to decode the secret language of the financial markets. We're going to show you how to look at pretty much any chart and instantly get the story it's telling, just by combining two super powerful tools, the price itself and the volume behind it. So, let's just get right into it.
What if I told you that every chart isn't just a bunch of random squiggly lines? What if it's actually a story about greed and fear and strength and weakness all unfolding right in front of you? Well, you can read it, you just need to learn the language.
And this story, it's written in two, let's call them languages, that are totally interconnected. First, you've got price action. That tells you what is happening. And second, you've got volume. And volume tells you how it's happening. You know, the conviction, the emotion behind all those moves. If you can master these two, believe me, the market starts to make a whole lot more sense.
Okay, so let's start with that first language, price. And to do that, we have to understand the basic building blocks of pretty much every modern chart out there, candlesticks.
A candlestick is way more than just a little bar on a chart. It's a snapshot, a picture of the battle between buyers, we call them bulls, and sellers, the bears, over a set period of time. Could be 1 minute, could be 1 day. It tells you exactly who's winning that fight.
So each and every candle gives us 4 critical pieces of info. The open, that's the starting price. The high is the absolute peak the buyers managed to push it to, and the low is the bottom, where the sellers dragged it down. But you know what? The most important part is the close. That's the final price. That's the market's final verdict for that period.
And you can tell so much just by looking at the candle's body. That's the thick part between the open and the close. A big, wide body, that just screams confidence. There was a clear winner in that fight. But a skinny little body? That whispers indecision. It tells you it was a tough struggle and nobody really came out on top.
But look, price is only half the story. To really get the full picture, we need to bring in its partner, volume. This is the hidden force. This is what shows you the real strength behind any price move.
So volume, simply put, is just how many shares or contracts changed hands. It's a measure of participation. Think of it like this. It's the applause at a concert. A little polite clap is, well, it's very different from a roaring standing ovation, right? Even if the band plays the exact same song. Volume tells us just how enthusiastic the market really is about a price.
So a price move that happens on high volume? That suggests there's strong agreement, real conviction. It's a move that has some serious energy behind it. But a move on low volume? That's a sign of weak interest, of doubt. It might be a total fake out, a move that could just fizzle out because there's no real participation, no real belief backing it up.
And this right here, this brings us to the central idea of this whole explainer. Price tells you what happened. Volume tells you how much it actually mattered. Looking at one without the other is like trying to read a book but skipping every other page. Yeah, you'll get some of the plot, but you're going to miss all the nuance, the real meaning. So we have our two languages now, price and volume. Now let's talk about how to actually combine them to read the market story. This is where we build a real practical framework.
Now, you might see some analysts out there with these super complex frameworks, 6, 7, even more rules for how to interpret all this data. But honestly, you don't need to overcomplicate it. In the real world, all of that analysis really just boils down to 3 core actionable principles. First, just read the candle itself. Is the body wide? Is it narrow? That tells you the immediate feeling in the market. Second, you got to consider the context. A big green candle after a huge drop means something completely different than that same candle at an all-time high. And third, and this is the most important step, validate with volume. Does the participation level, the volume, actually confirm what you think the price is telling you?
So look, if you take away only one thing, let it be this. Always, and I mean always, use volume as your fact checker. If the price makes some huge claim, like breaking out to new highs, you need to look at the volume and ask, does it back that up with strong participation? If it doesn't, you should be really skeptical.
All right, enough theory. Let's put this all into practice. Seeing it on a chart is where it really clicks. Let's walk through a super common pattern and see what price and volume together can really tell us.
Okay, so here's the setup. On the surface, things look pretty good, right? Bullish. We've got 2 green candles, one after the other, each one closing higher than the last. Looks like a classic uptrend. But now let's add our second language, volume. And when we do, we notice something kind of weird. The second candle, it made less progress upwards. It has a smaller body, but it traded on way higher volume.
So here's the puzzle.
If there was so much more activity, so much more trading, why did the price barely move up? This contradiction, this is a huge clue that something is happening just beneath the surface. The market is putting in a ton of effort for very little reward. So why?
Well, there are two main explanations. Scenario A, it's a trap. The big institutional players are quietly selling off their shares to all the excited retail buyers who are jumping in. They're creating resistance, which is why the price is struggling. The likely result? A sharp drop. Scenario B is the total opposite. Institutions are actually absorbing all the selling from nervous traders, getting ready for a massive breakout to the upside.
So how do we know which one it is? We wait. We wait for confirmation from the next candle. And in this example, the very next candle is a big red one that closes below the second candle, confirming scenario A. The selling pressure was real, the trap has been sprung, and anyone who bought in late is now stuck. This just perfectly shows how volume revealed a hidden story that price alone could never, ever tell you.
So, what's the big takeaway here? Understanding this dance between price and volume isn't just some neat little trick, it's a fundamental edge. It helps you understand the psychology of the market.
As the source material puts it so perfectly, the candlestick is only half the information. The other half is the volume. When you finally learn to read them together, you get a much more complete picture of what the market is really trying to do.
So let's just recap real quick. Price tells you the story of what happened. Volume reveals the conviction, the emotion behind that story. Your job is to always use volume to double-check what the price is telling you. This simple framework, it shifts you from just blindly reacting to price to actually understanding the forces, the real fear and greed that are driving it.
Learning to read price and volume together is just like learning a new language. Yeah, it takes practice, but once you get fluent, you can suddenly understand conversations that used to be just noise. So the final question is for you. Now that you know the language, what stories will the market tell you?